The NASDAQ is currently closed for the weekend, having ended the last trading session on Friday, November 7, 2025. Datavault AI Inc., trading under the ticker DVLT, closed at $1.73 per share, marking a significant plus 2.37% gain in after-hours trading following a highly volatile day that saw the stock trade between $1.23 and $1.72. This is the crucial immediate data point. The stock is not just holding, but pushing higher after a huge daily swing, following a week of massive volatility. Now, what the general public is focusing on is the recent noise, the short seller report that dropped last week, the company's aggressive and immediate legal rebuttal, and the highly unusual announcement of a Dream Bowl draft meme coin distribution to shareholders of record on November 14th. The expectation is that this is simply a hyper-volatile, heavily promoted microcap stock, one that lives and dies purely on news headlines and social media hype, the kind of name you see being bought and sold by users on platforms like Robinhood stock trading, with little concern for fundamentals. However, the reality we need to consider is that beneath the surface-level promotions and market theatrics, there are several extremely significant, substantive financial and strategic developments that have fundamentally altered the company's balance sheet and operational runway, developments that the volatility is obscuring. The primary narrative that most retail participants are missing, the deeper truth that is driving the sustained, albeit frantic, trading volume, is the fact that this company recently secured a massive strategic financial backing that significantly de-risks its immediate operations and funds a substantial acceleration of its core AI-driven data tokenization projects. We are talking about a committed $150 million strategic investment, with the first tranche already closed, alongside an in-kind commitment of 20,000 engineer hours from IBM. For a company of this size, with a market capitalization around the $500 million mark, that kind of capital injection and high-level technical partnership is a complete game-changer for its operational viability, irrespective of the promotional side. Furthermore, this financial strengthening was paired with a $10 million worldwide exclusive license agreement with Scilex Holding Company for the tokenization and monetization of real-world assets in genomic and drug information, a clear move into the highly valuable biotech data market. This isn't a small-scale pilot project, this is a multi-million-dollar exclusive licensing deal in a compliance-heavy, high-margin sector, and it instantly provides a clearer line of sight to tangible recurring revenue than any previous announcement. The market's common ground belief is that Datavault is a speculative tokenization play, pure and simple. The contrarian take, the deeper reality, is that these massive concrete strategic and financial deals, particularly the one with Scilex and the deep partnership with IBM, establish an institutional scaffolding that challenges the simple meme stock label. This scaffolding is the real story, and it provides a critical layer of substance that the short seller report intentionally or unintentionally minimized, which is likely why the stock rallied so sharply in the face of a highly negative publication. Let's look closely at the recent stock movement. The stock's journey from a 52-week low of $0.25 to its recent high of $4.10 and the subsequent pullback and rebound tells the story of a narrative stock adjusting to real financial input. Volume has been massive, consistently in the tens of millions of shares daily, with a recent high exceeding 61 million shares in the latest session. This level of transactional activity suggests two things. First, high retail interest, likely fueled by discussions on social platforms that are common with individual brokerage accounts, and second, significant institutional positioning and counterpositioning. While institutional ownership is still relatively low at around 5%, recent filings reveal key institutions like Vanguard and JP Morgan Chase & Co. increased their positions in the most recent quarter. This is absolutely essential to recognize. While the overall institutional footprint is small, the trend among some major players has been toward accumulating shares, not selling them. This activity hints that sophisticated investors are looking past the volatility and the noise of the short report and focusing intently on the projected Q4 2025 revenue guidance of $12 to $15 million and the highly ambitious 2026 revenue target that is expected to exceed $50 million, numbers that are unprecedented for this company and entirely dependent on the successful execution of these new strategic deals and the rollout of their 4 new data exchanges. The tension here is between the volatility, the reality of the day-to-day share price fluctuations, and the underlying, much more stable reality of the capital inflows and licensing deals. Which one will win out is the central question for anyone considering adding DVLT to an intelligent portfolio. To understand the core business, Datavault AI operates on 2 main synergistic platforms: data science and acoustic science. The data science platform is anchored by its Datavault platform, which is a patented, cyber-secured system for digital asset tokenization, valuation, and monetization in the Web 3.0 space. This is where the headline-grabbing work happens, such as tokenizing real-world assets like unmined gold or name, image, and likeness rights in sports and entertainment, and monetizing corporate data, the future information data exchange. The acoustic science platform is built on proprietary technology that utilizes inaudible tones for data over sound, with applications in marketing and digital communication, and includes brands like Audio. What the company sells is not just software. They license patented technology and build the infrastructure for secure, compliant real-world asset tokenization. The historical performance is one of significant net losses, which is typical for a deeply focused, pre-profitability tech infrastructure builder. The prior quarters showed minimal revenue, which is why the new $12 to $15 million quarterly guidance, largely stemming from the CompuSystems acquisition and new licensing deals, represents such a significant inflection point, if they can execute. This is where the market narrative is truly being rewritten, moving from a concept company to one with initial measurable sales, albeit with continued heavy net losses. The sheer volume of recent partnerships, from a comedy club for live joke copywriting to a multi-year deal with a health company for supply chain tracking, shows a scattergun approach that either suggests management is throwing everything at the wall to see what sticks, or that their patented IP is genuinely flexible enough to apply to multiple disparate data-heavy use cases, which is a key technical expectation for successful AI infrastructure plays like NVIDIA stock. Looking ahead, the future outlook for Datavault AI hinges almost entirely on execution and regulatory clarity. The expectation among bulls is a rapid, near-vertical ascent fueled by the launch of their 4 new data exchanges: International Elements Exchange, International NIL Exchange, Information Data Exchange, and American Political Exchange, all expected to launch by year-end 2025. The reality, however, is that these exchanges operate in highly regulated gray areas of digital assets and tokenized securities. Their success is deeply tied to getting regulatory approvals, and while the company is working with firms and citing favorable legislation, the speed of government action is notoriously slow compared to the speed of a startup like Datavault. The $150 million investment provides a massive cash cushion, but the company's ability to convert this capital and the IBM technical support into revenue-generating infrastructure is the key catalyst. Failure to meet the aggressive $12 to $15 million Q4 guidance would be a massive blow, reinforcing the bearish view fueled by the short report. Conversely, simply meeting the midpoint of that guidance, let alone exceeding it, would send the stock surging, because it would be a concrete, quantifiable data point that fundamentally validates the new strategic direction, proving that the money and the partnerships are translating into sales. For investors operating on platforms like Fidelity, who prioritize stability, or those utilizing Schwab Intelligent Portfolios, this remains a high-risk proposition due to the deep red profitability metrics and extreme volatility. It's a name best suited for the active trading environment of an individual brokerage account, where an investor is prepared for significant daily swings. The key risk, beyond execution, remains the overall financial health and the ongoing short seller controversy. The short report highlighted concerning financial metrics and potential red flags, forcing Datavault to go on the offensive. While a legal response is expected and even necessary, the market ultimately measures success in financial statements, not legal filings. Furthermore, the use of a meme coin distribution as a shareholder loyalty mechanism, while perhaps a creative use of their tokenization technology, does little to assuage the concerns of serious long-term investors and contributes to the narrative of hype over substance. The risk is that the company prioritizes flashy promotional activities over the tedious but necessary work of building out compliance-grade institutional-level data exchanges. The opportunity, the expectation-exceeding scenario is simple. They successfully launch the International Elements Exchange and the International Nil Exchange before year-end, announce a handful of blue-chip corporate partners for the Information Data Exchange, and then deliver Q4 figures at the top end of their guidance. That convergence of execution, regulatory progress, and financial performance would completely change the perception of Datavault AI stock from a promotional gamble to a genuine, albeit early,